How to avoid common investing mistakes. You know the feeling. You've got your savings in place, you're ready to invest, and then, boom, you're hit with an overwhelming sea of financial advice, confusing stock charts, and promises of quick riches. You start doubting yourself and wonder if you'll ever be able to avoid the same mistakes that many people make in their investing journey. Well, here's the thing. The smartest investors make mistakes too, but they don't repeat them. Today, we're breaking down the common investing mistakes that you need to avoid so you don't lose out on your financial future. Stay with me because I'm going to give you actionable steps you can take to build wealth without falling into the traps that most people do. The fear, the danger of getting it wrong. It's easy to think that investing is all about picking the right stocks, right? But here's the scary truth. One wrong move, one bad habit, and you could lose years of progress. In fact, many people never recover from the mistakes they make early on in their investing journey. And the worst part? These mistakes aren't obvious. They often show up when you least expect it. One minute, you're riding high on excitement, and the next, boom, you've lost money. Think about it. How many times have you heard someone say, "I wish I'd started investing earlier," or "I thought I knew what I was doing, but it didn't work out"? Emotional trigger. The fear of regret. I get it. No one wants to be that person. No one wants to look back and wish they had made better choices. So if you're feeling overwhelmed or uncertain, don't worry. You're not alone. I'm about to show you exactly how to avoid these mistakes before they even happen. The solution, mistakes to avoid. The road to wealth. All right, let's dive into the biggest investing mistakes that people make and, more importantly, how you can avoid them. Mistake number one, not starting early enough. The first mistake is so simple, yet so critical. Waiting to start investing. If you're in your 20s or early 30s, you have the advantage of time. Compound interest is your best friend, but it only works if you start early. The longer you wait, the more you miss out on potential gains. Now let me ask you, if you had started investing 5 years ago, where would you be today? Would your portfolio look different? It's not too late, but don't let the years slip away. Here's the fix. Start with whatever you can, even if it's just $50 a month. The earlier you get started, the more you'll benefit from compound growth. Even if you don't have a lot to invest now, every dollar counts. Mistake number two, trying to time the market. Now this is a big one. Everyone's heard about people getting rich off of buying and selling stocks at the right time. But here's the truth. Market timing is a myth. It's impossible to predict when stocks will rise or fall in the short term. Trying to buy low, sell high sounds great in theory, but in reality, it's a strategy that often leads to big losses. And I get it. Who doesn't want to be the next Warren Buffett, right? But guess what? He doesn't waste time trying to time the market. So maybe don't spend all night researching the next big stock pick. Instead, focus on the long term. The solution here is simple. Invest consistently and think long term. Set a strategy, whether it's dollar cost averaging or investing in index funds, and stick with it. The market will go up and down, but over the long haul, it generally trends upward. Mistake number three, letting emotions control your decisions. Okay, here's another big one. Emotional investing. If your stocks go down, don't panic and sell. If they go up, don't start thinking you're invincible and make risky bets. Have you ever sold a stock because you were freaked out by a market dip? Or bought something because you got too excited? Yeah, most of us have. But here's the thing. You don't want to invest based on fear or excitement. To avoid emotional investing, create a solid plan. When the market dips, stick to your strategy instead of reacting. Don't let the short-term movements of the market dictate your long-term decisions. Mistake number four, ignoring diversification. Here's a biggie, putting all your eggs in one basket. It's tempting to pour all your money into that one stock or cryptocurrency that's making headlines. But here's the harsh reality. You're setting yourself up for disaster. It's like betting your entire paycheck on a single lottery ticket. Good luck with that. Diversification is key. Spread your investments across various asset classes, stocks, bonds, real estate, etc. This reduces risk and protects you from losing everything if one investment tanks. The urgency, don't wait another day. So what happens if you keep making these mistakes? The truth is, you'll likely lose time and money. That's why it's crucial to take action. Now, every day you delay is another day you could be building your wealth. Mistake number 5, underestimating the importance of fees. Do you know how much you're paying in fees on your investment accounts? Trust me, if you're not careful, those little fees add up. You could be losing hundreds or even thousands of dollars over time just because you didn't check the fine print. Are you still paying high fees on your investment accounts? If you haven't checked, now's the time to do it. Don't let unnecessary fees eat into your returns. Take a look at your fees. Invest in low-fee index funds or ETFs, and make sure you're not paying for services you don't need. That extra 1% fee could cost you tens of thousands of dollars over the next 20 years. Now you've learned how to avoid the biggest mistakes most investors make. But here's a secret I haven't told you yet. The real key to investing success isn't just about avoiding mistakes. It's about doing something extraordinary that most people aren't willing to do. Stay tuned for my next video where I reveal exactly what that is. If you found these tips helpful, make sure to like, comment, and subscribe so you never miss out on more powerful strategies to build your wealth. Leave a comment below. What's the biggest investing mistake you've made, and how did you overcome it? Let's continue this journey to financial freedom together.